Okay, I'm going to get started. Perfect. So my name is Pablo Ortiz from the FX Method, and we're going to talk today about trend trading systems. We're going to go a little bit in detail what the characteristics are, the strength of this type of trading, and the weaknesses. Okay, what we can expect when we trade in this trading style. It's very popular. Actually, most of people trade trend systems because they're easy to be understood. But we will see that there's not really a better way of trading or a worse way of trading. The point here is to combine different styles, different ways of trading into a strong portfolio. So trend trading systems are necessary. I would say they are a necessary evil, or they are a necessary good, but they are in any case necessary. So if you're new to us, the proposal of the FX method is that you don't trade the same way, that you try to automate your trading with trading systems, with trading robots in MetaTrader 4, and that's our proposal. We do some lectures almost every 1.5 months in London, and you're more than welcome to come over to one of our free lectures. Okay, so that's the syllabus of today. We're going to talk what is basically a trend system, how it's regularly defined. I'll give you what I think it's a maybe better definition. We'll see that trend trading is always delayed, and how important the exits are, not only for the coding, for the logic, but also for the optimization. We'll go into a few of the subfamilies of trend trading systems, such as pullback systems, volatility trend systems, and so on. And then we'll see some of the strengths of the trend trading style. Okay, so you can go ahead and stop me anytime in the chat if you have any questions, and just do that. Okay. Later on, I'm going to explain you. We have an offer with AxiTrader. For those of you who are new, I'm going to explain this at the very end of the webinar. Okay. Okay. So we have that basically the markets move in three ways, and many people don't know that, and it may be an oversimplification, but that's the truth. Basically, the markets move. Let me take another drawing. Maybe this one is strong enough. Well, yeah, they move most of the time within two price levels. We call this a range, right? That's happening 70% of the time. Okay. Then when this breaks either up or down, we have what we call a breakout. This happens 10% of the time, and the breakouts generate what we call trends, which happen 20% of the time. And this keeps us moving on and on and on and on. Okay, we go from a range through a breakout into a trend. You follow? It's always in the sequence. In order to obtain a trend, we must start with a breakout. You follow? And the other way. Actually, when the trend is stagnating, it goes into a range. You see that? And either we continue the trend downwards, or we have a breakout into a reversal, and the trend goes in the other direction, and that would be a reversal actually of the original trend that generated here. It can go either way. A range can break out in the trend or original trend direction. So you should always play with these three. We call them market characteristics. So trend trading happens only 20% of the time in the market, not 20% of the times. That's incorrect. 20% of the time, and that's an average, right? There's many years. There's years such as 2012 in the forex market. There were hardly any trends. Okay, so that's the average. There's more trendy years, and there's less trendy years. Okay, that's very important to understand. So, question for the group: what's the definition of a trend? Let's see if you did your homework. I want to see it in the chat. Don't continue reading. Just tell me what is your definition of a trend. How were you told that the trend is defined? Put it in the chat. That's all. Higher high and higher low, just one? Higher highs, Paul Gillard? Yeah. Yeah, exactly. Higher highs or lower lows. It's either way. It's either. Yeah. But plural is very important in the definition, right? We have a higher high, higher highs, you see? Higher high, and higher lows, or lower lows, right? And the other one. Okay, and we need generally at least 2, and this needs to go down in order to confirm. That's the minimum. So we lose all of this. Once we confirm here or here, when it's broken, once it's broken the second time, the second high, right? We can either confirm here, right, by technical analysis on the pullback at the very end of this pullback movement, right? This contraction here, or we can confirm once it breaks out from here. But that's not a breakout system; it's a trend system. Okay, don't confuse. It breaks this level. Okay. So the thing is that sometimes a breakout can be actually more of a trend system. The main thing, what we're looking here is, I have another definition for that, which is, in my definition, a trend system is anything which may catch beyond 40, 60 pips, right? Because you say, okay, what if this would happen, this pattern here, but this movement would be just like 5 pips here and 5 pips here? By definition, it's 2 higher highs, right? So this would be a trend. That's not a trend for me. You see? So I tried to find a more precise definition, and I said, okay, it must have at least, I must be looking for 40 points, 60 points. So in my definition of a trend system, I say a scalper will go up to 10, 12, 15 pips, right? Anything between 12 and 40 points, I've found, I created a family. We can talk about it if we do further webinars on this trading system families, which are really very, very important and a big part of our paid education. Everything between 12 and 40, I would say it's a medium target system, and anything beyond 40, 50, 60 pips, it can be 500 pips, 200 pips, 120 pips, it's definitely a trend system. But not only, it must have, in general, there is an exception I will give you later, it must have a ratio of 1.5 to 1. I always put on the denominator, on the lower part of the divisor, right, I put the stop loss, right? So we should have at least 50% more than we risk for it to be a trend system as well. Okay, so both things, I would say 40 pips at least, 60 pips or beyond, and what we call a long ratio, meaning that the target is always longer than the risk. Okay, at least 50% longer. If we're risking, if we're going for 60 pips, the stop loss should be maybe 30 pips, 45 pips, but not longer. Okay, that's what it means, this 1.5 to 1. Okay, being here, I'm going to draw it here, so there's no doubt about it. Being the lower part, the stop loss. This is very important because people say risk-reward ratio, and if you went to my lectures, you know it's wrong. It's reward-risk ratio. I don't want to explain it now. You need to come to the lecture, and that's it, because there's new people here in the room to understand that. But just keep in mind, it's wrong. It's reward-risk ratio, not risk-reward ratio. Okay, so that means that the take target, the profits, what we catch in this trade should be at least 50% more than what we risk. Okay, so if you have this clearly, now you understood that a trend is you're always late by definition, because you need what we call confirmation in technical analysis. You cannot enter the trend here because that's gambling. You don't know if it's really forming. So in order for that, you need at least one maximum, one minimum, another maximum. Some people say 2 maximums and two maxima and 2 minima. And some people say 2 and 1 and maybe here enter. And some people say at least 2 and 2 and even confirmation that it goes beyond. Whichever way you see it, that is always lost. Whatever the impulse is, the first movement of the trend is, either way, you're doing technical, manual trading, automated trading, I don't care, you always lose the beginning impulse. And that's why it doesn't make any sense that people put so much emphasis when they do trend systems. For example, when they program trend systems, and they put so much emphasis on the entry. I don't really care about the entry so much in the trend system. The main thing is the ratio. You will see it now, and the main thing is the exit point, because I'm always late. Otherwise, I'm not doing trend trading, right? Because I need to confirm. So this is a very important concept in order for you not to spend so much time into finding the very precise entry in a trend system. You will not do that. Tomorrow we will be talking about the scalpers. There the entry is crucial, paramount, not in the trend systems. Okay, here the exit is crucial, and we'll see why. Okay, so in the majority of the trend systems, as I explained, we have a long ratio. Not right here now. What we do here is basically we're putting in comparison, sorry, let's say I'm doing a buy trade today on the gold. You watch it? Since the markets are doing really bad, people are scared. Okay, so for example, I'm doing a buy trade on the gold. I'm going long, and my entry, I always draw it in gray. That's my entry point, right? And my stop loss, by definition, has to be 1/3 or less of the take profit, right? Sorry, it's 1.5 to 1, whatever. Okay, so that I call whenever it goes beyond 1.5 to 1. Sorry, I should put it in green here. 1.5 is the take profit, and when that, or put it in another way, when take profit is longer or much longer than stop loss, I call it a long ratio. Okay, that's a long ratio, a long proportion, right, in the reward risk ratio. And when it's the other way around, which you can trade, by the way, you could trade the other way around. You could have it further stop losses. We'll see tomorrow on the scalpers and take profit. I call that a short ratio. A short ratio. It doesn't have anything to do with whether you're shorting or making long trades. It's the proportion of your reward risk, right? So generally trend systems, only one subfamily doesn't have that, which I will explain later, has very much longer targets than stop losses. They are much longer. Normally it's not just only more, but much more. Okay, I will show you the system we give out. For example, has a stop loss of 23 points, and it can go even up to 550 pips, right? The free EA we have, actually we give out 2 free EAs if you open the account with Axie Trader. The second EA I'm mentioning now, which we actually watched the other day on I think it was last Friday, we're optimizing it. The video is in our channel. I can give you the link later for that. Okay, so we have long ratios. So if you have all that, you have the definition, actually our definition of a trend system. Long ratios, okay, you're always late, okay, and it uses one of the major market characteristics, which is the trend movement, of the price, which is one of the 3 aspects a market can take. Okay, if that's clear, write me something in the chat so that I can go further. So there's different types of trend systems. There's not just only the big family I explained you. There's even more families, but I'm going to explain just 3 major families now. It's very usual, and it's very people like it. It's very simple to understand to have moving average style trend systems, right? What we do usually is just we take here. That's for later. We take here. I'm going to take the robot away because it's not part of today's explanation. And we take here, for example, 2 moving averages, and where are they? Moving average indicators, trend, moving average. Okay, let's take the usual. It's like, for example, 14. That would be, I'll put it red, and I'll put it a bit thicker so you can see it properly. That's a short moving average. And then let's take another one. Let's take a really long one. I'll put it blue. The longer, the colder the color for us, right? And I'm going to take another one. Well, that's fine for me. Okay, so that's a usual way to watch trends. The problem with moving averages, they are very, very delayed. Okay, so if we trade like this, the trends, yes, we'll catch them. In this case, with gold, it's an excellent way of recognizing this trend, right? It started actually very recently. On these 2 moving averages, it was actually on the 19th of January, and I would have caught an incredible movement in gold, and it's actually not even finished, okay, over the last, 10 days or whatever. But it doesn't work always this way. And the thing is that many of the trend systems that we find, the robots, actually they're based on moving averages. Anything which transforms a moving average, like such as a MACD. MACD is only a transformation of moving averages. It's only the distance between these two moving averages. We put here MACD. I don't know if you have it here. It's only basically calculating this distance. Well, I wouldn't put it, but I think everybody here knows what a MACD is, right? If not, put it in the chat that you know what it is, and I'm going to find it for you. But I think majority of the people here know what I'm talking about. So the thing is that any transformation of a moving average, for example, there's more advanced moving averages. There's, for example, I don't know if you know the THV strategy, which is based actually in indicator developed by a guy named Cobra, and it's basically based on moving averages. All of this is basically a moving average style trend system. It doesn't. I don't care if it's the original moving average or if it's an exponential moving average or if it's a very advanced transformation of the moving average, like super trend. I don't know if you heard about that. It's a very good indicator for trend systems. We did actually a trend. It's a pity I don't have it in the platform, but you can look it up. Super trend. Okay, it's an indicator. It's a transformation of a moving average with a quadratic regression. I think it has inside, and it's much better to detect trends than the average moving, the usual moving average. Okay, and we did a trading system based on that and CCI. CCI is a very good indicator for confirmation in trend systems. And when I put it for you here, it's a commodity channel index. You can check it out in Investopedia. What it does, it's basically an oscillator, and it works very well if you know how to use it to confirm the start of a trend. But I don't want to get too technical today. I just want to tell you that all of these transformations of moving averages that are not the original moving averages belong to the same big family of moving average style trend systems, and they are fine. Okay, they are only very delayed, the entries. The other complete, I would say almost complete opposite, there's like three big families in trend systems, is the pullback systems. Let me draw it here better, or I could find a pullback actually. And the difference with the pullback systems is, I want to, for example here, right? We are already in an uptrend, right? I don't know if you see that. We're coming from below here. And this here, I don't know if you see my arrow, is a pullback. And what robots do, they do it in a very smart way. The problem with the pullback is always that you don't know when the pullback is finished, right? You know it's pulling back. You could make a buy trade here, right? Because we are in an uptrend. But it can continue to go down as it does. Or you can make another buy trade here. Or you can make another buy trade here. And actually all three is the right answer. But of course this one makes less money than this one, right? So, but if we don't enter here, it may go already backwards into the uptrend here, and we may lose the trade. So that's the problem with the pullbacks. But the main difference about pullback trend systems and moving average trend systems is the ratio. And many people don't know that. The ratio is completely different. In pullback systems, what we have is a much longer stop loss. If you trade this pullback, usually what you do is the following. You put here, let me change the color here. I'm going to draw it here with a, usually you put a much longer stop loss like this, and you don't go for 500 pips or so. When you're trading pullbacks, you go only, even below this point. You're waiting for the price to pull a little bit back, maybe 20, 30, 40 points, maybe not more. So that's an exception to my original definition of what the trend is, right? Because I said, okay, yeah, normally 40 points, but in the pullback systems, I'm very happy with these 10 points here. It should be green, actually, the color. You see that? So the target here, here's the entry. Let's do it gray. Here's the entry. The target is much closer than the stop loss in the pullback systems. So we have here what we call a short ratio. It's the complete opposite regarding risk-reward, reward-risk ratio than in a usual moving average style trend system. So you should know that. Many people trade the pullback expecting a continuation of the trend. That also exists, but a more proper way is just to trade the pullback only up to the last high or even below the last high. That's a more correct way of trading pullbacks. And in order to have a good system, usually we have the take profit, let me draw it here, smaller than the stop loss. And that's a complete exception to the usual trend systems. Okay? The stop loss in the pullback system should be further away than the take profit. Okay? So it's a completely different subfamily of trend systems, and you should know it. Okay? You can of course trade it the other way also, but these are very successful systems. And actually we have one system which was trading over the last 5 years. If I do a webinar only on pullback systems, which we could do actually, and be even more specific, I could show you the system, and it worked out very well, because one way of detecting this pullback, what we can do is use the angle of the two moving averages, right? And if I check the angle, let me draw it here. If I check the angle of the two moving averages, for example, I have one moving average like this and another moving average like this, I can detect when the pullback is exhausted once the moment to enter the market just by checking these two angles, okay? Or what we call the speed of the moving average, right? How quickly it's falling or not falling. By the angle of two moving averages, we can really detect when is the right moment for a pullback. And it works very, very nicely. Over many years, you need to re-optimize so often, okay? Another complete different family or subfamily of trend systems are the volatility trend systems. And I took a robot to show you, and what these do is they detect a high impulse candle, for example, or difference in volatility of the volumes of the candles, right? And that's what I brought. Actually, I have already, well, I have it down here, and I just caught, I'm going to do first a long back test. So you see one of the things that happens with trend systems, and when you do a very, very long back test, which you should actually, is that you have many, many years of stagnation. Now, this was a very trendy moment, and this is, of course, very bad, but this comes with trend systems. I mean, you will have 2 years of stagnation, you know. Of course, when you catch the very trendy moments, you're very happy, but if you would catch these 2 years, and we can check the dates actually, and you will see these were really the sideways markets or the flat markets, right? From 2013 May to 2015, it started moving now again, the forex market on the euro dollar. Okay, we had really a flat market, and we'll check later on the slide. This is what happens, and it doesn't matter which kind of subfamily you have on the volatility systems. You will also catch stagnations. We call them stagnations in the capital curve, and that's very bad. But I'm going to go here when the market recovers and becomes more trendy. On the 18th of March 2015, I can do the back test. I can select here with the trader the dates which I want to see, and I'm going to go in the visual mode, and I want to show you how this system actually works. And let's forget that part. Let's see here. Speed it up a little bit. There you go. Okay, so you see there was a very impulsive candle here, which indicates that there's volume, a lot of volume, volatility in this direction. And we only do buy trades, right? And depending on some entry rules, it entered a basket here of 4 or 5 trades, you see? and it closed all the basket here, which is the exit, which is, we'll check later. It's very important. Let me see if there's another trade, another position actually. This was 5 trades. I think we can check here, 4 trades, okay. And you see there was a lot of floating in our favor. Another time, you see that? Oops, I should stop that. Go backwards. See, impulsive candle, a lot of volume, boom, 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 boom. We expected the market. That's a classical volatility trend system. So you see, it's completely different to the other robot or trend system that we gave you, which is this one, which actually makes only one trade, right? And works based on moving averages. So you get a completely different, it's a different flavor, right? That's what I wanted you to understand, that trend is not equal trend. It's not the same a pullback system, it's not the same a volatility trend system, it's not the same something based on moving averages. It has a completely different flavor. Let me catch, for example, this moment here. You see you have also the flat markets here, right? Different system, but when it's flat, it's flat. There's nothing to do with trend systems, right? This is terrible because it's a very long period, and actually you're doing nothing with your money, right? It's here starting on the, maybe even other dates, 2010 October till December 2011, 1 year not earning. Okay, so there you go, and here we go, and let's check here this trade here, 29th of May 2013. 29th of May 2013, and I want you to see actually how the flavor is so different from the volatility trend system, right? Sorry, I wanted to put the visual mode. So I want you to ask me some questions now. I don't know if you caught that there's different subfamilies and they have completely different flavor, and that they base their logic on completely different rules. Okay, so that based on moving average is correct, but in a volatility trend system is definitely not going to be based on that, and it's going to be based on volume or impulse, and the trading system will be completely different in the end, actually. Although they are both trend systems, right? And the pullback is another breed of cat, and will have a short ratio. You see, here the other system would have entered, right? And our system, which is based on moving averages, is not entering the trade there. Hopefully it's entering the trade soon. Otherwise I'm going to accelerate this. And here in this trend system, the strength is on the trailing stop. Oops, there it is. You see, although there was an impulsive candle, it comes from below. It wouldn't work in the other system, right? We were very lucky. Stop loss is very narrow. You see, we're already in a long ratio. We are already in a long ratio. We have the stop loss at 15 points. We're already earning 44 points, right? And we're still at closing. See that? We're earning more even now. It's maybe too fast to show. Put the speed up a little bit down. And I just want you to have the flavor that a trend is not equal trend. Okay? So when you become a trending system analyst, that's actually what our education is about. You start distinguishing all these things. You see, okay, that's a trend system. You see how the trending stop is moving upwards already. But the thing is that the flavor is completely different because this is based on moving averages. I don't want to get into the logic of all of these two training systems. I just want you to understand the flavor. Okay. In the other one we were handling it, it's in the slide, I will show you later. We were solving the exit with more trades in the position, and we were working with this, with the re-entry. In this we are working with the trading stop. But in any way, we're trying to solve the exit in both trading systems. Okay, and you'll see that now in the slide. So the exit is very crucial in trend systems, right? We consider that the exit also the following, because actually, for example, the traditional exit rules is like, if you had two moving averages and they were telling you, oh, I closed my MetaTrader, I shouldn't. let me find it again. If you have two moving averages, right, and they tell you it's an uptrend, like we saw in gold, right, and they reverse, what does it mean, the reverse? Here we had the signal, right, for gold several days ago here. Imagine now the red and blue cross again. It's a moment to exit the trade. That's a classical exit rule, right? Whatever gave you an entry, and whenever it gives you the opposite, it's called a reverse signal, right? If red would be crossing with blue, it's definitely not a moment to stay in the long trade. In this case, in gold, right? That's a classical way of exiting, right? But we are not talking about that. We're talking in a more general way to define exit, right? That's an exit rule, okay? But there's more things to exiting. For example, position management. Position management, although it's not precisely exit, is a way of handling exits as well. For example, a trailing stop. So when we're talking about trend systems, trailing stops are crucial. And the other thing is partial exits, right? In the system I showed you, you could also consider in gold, for example. You could consider, well, when I have so many pips and I entered with one lot, for example here, I could exit with half a lot. All partial closes, which is position management, affect majorly a trend system. And many people don't know that. They just trade the trend and they don't care. But believe me, these three things, if you combine them the right way, if you find additional exit rules like reverse signals or whatever, if you are very smart with your trailing, and if you are very smart with your partial exit, and partial exit is not 50-50, not necessarily. You could, for example, exit 60-40, or the other way around. You could go for the long trend and exit 30% of the trade at the beginning and 70 later. It all depends on the optimization, right? You can majorly change a trend system. You could make a stupid trend system of two moving averages. If you have a good trailing stop, if you have good partial closes, you would be making money. Believe me or not. Okay, so exit is the whole big concept here in the trend system. Do these three things and you're on the winning side. And even if you combine them, even better. So what I showed you in the other system is even in the position management, we can re-entry, right? That's part of position management. And in trend systems, it's quite usual that if you really caught the trend and if you're in the right direction, you enter more than once in the same direction, right? And that's what we saw in this other system. We saw position management based on re-entry. So you should consider all four. You should consider also on the trend. You can what we call pyramid, right? Either when it goes down in the pullback, for example, you can do re-entries in the pullback downwards, or you can do re-entries like you saw in my volatility trading system. When it goes upwards in your favor, you can re-enter. Okay, both ways. In a pullback, right? I'm talking in a long trade, right? You should re-enter when it goes downwards still, and just to, I can draw it actually. Let's say you were in the pullback, you're here on an uptrend, right? This is the pullback, and it continues here. Let's say you entered here with your buy trade, whatever, I'll draw it with the same color. You can re-enter. That's position management. If it continues to go down, you can re-enter, not endlessly, let's say maximally 4 times. That will affect your trend, your profitability in the trend system, and you go out with a basket with all 3 trades, right? You don't need to catch any more the 50 pips or whatever pips you need to catch on the first trade. You re-enter on the pullback, and the opposite of that is on the volatility trend system, right? We just saw there was an impulsive candle here. You enter the trade, right? Whatever, maybe here or maybe in your favor, you re-enter the trade, right? Even one more time, and you close all the basket here, right? That's what you saw in the volatility trend systems. So re-entry makes sense in both cases, even if it's in the opposite direction, right? So you should think about it because it will really help your trend system. That's what this slide actually means. Okay. So the exit, let me tell you, is not only important for the logic of the trend system, it's also very, very important, if not even more, when you optimize. And many people they're very obsessed with optimizing in a trend system the entry, which makes it's always late, right? You can really optimize it, but you will be not really making a difference, but you will be making a major difference if you optimize the exit, right? So you should know in your parameters, if you have a trend system, what are the exit parameters, right? What is really which parameters are here, the exit rules, right? And I explained you the other day, like it's a trailing stop, for example, here. So this, all this, what I'm clicking now, belongs to the trailing stop, right? This not actually, that belongs to the entry, and all of these parameters belong to the exit. So this really makes the money in this system. Also, the stop loss is an exit rule, right? I mean, in the positive side, the earning side. So you should really know in your systems what in your trend systems. Sorry, you should really know which parameters are the exit rules or belong to the exit rule, because they will really make a major difference in your ratio and in your earnings. So this is very, very important regarding trend systems. I told you this already. I'll recap on that. Many simple, really stupid trading systems, such as just two simple moving averages, will improve if you have additional smart exit rules, if you have good trailing stops, right? Sorry, it's not systems here, the word stops, trailing stops, right? This is a mistake here. Trailing stops, right? And one sub-case of the trailing stop is the break-even routine, right? This is very usual for manual traders. When they earn whatever, 20 pips, 30 pips, whatever, they put the stop loss at 0. That's just a sub-case of a trailing stop, right? This is included in this. And also very important that you make partial closes. Very, very important to improve trading system. The beauty of that is when we do it in a robotic way, we can really optimize the partial close. We know, like, okay, close 1/3, close so much percentage of the trade, and we really optimize it up to the 1%, right? You can decide to put an external parameter, and you say, okay, I enter to 0.3. If you have micro lots in your broker, you can go down as much as 0.01, right? You could be closing 0.12, then another 0.12. You can do even 3 partial closes, right? And improve the system. And it makes really for major differences in the trend systems. Okay. Okay. Having said that, there's weaknesses to the trend systems. And as I told you, that's the exit. It's really a weakness, because it's like I equal it to the goalkeeper, right? The goalkeeper shoots very strongly, but the shot, you never know where it lands, right? Same as a trend system. For me, the trend system is the goalkeeper, because it helps me to protect my drawdown. I'm going to explain later in the point number 2 here. And it's actually the strength. I said the strength is strong in the slide. I don't know what happened with the slides today. Okay, so what happens with trend systems is I need to explain you something real quick regarding the expectancy. That's very, very important. Let me just do a quick back test here, so you see that real quick. I'm going to take a lot of years, and I'm going to do just a quick back test of this robot over many, many years, and it ends well. The thing is that I always watch this figure here. That's what you expect per trade. It's actually calculated what earns the whole system over these many years. It earned 123%, which is a lot, and divided by the number of trades, you'll get to this figure, right? If you divide 12,000, so on, so on, so on, divided by 492 trades, you expect every time you enter the market to earn $25. And you may say, well, that's not much. Well, it's a lot. Let me explain you why. Because this, if I take a 10 grand account here, this equals to 0.25% of your capital. So if you have 4 trades of like that, you're basically making 1% on 4 trades, which is a lot of money, 1%. And you may say, well, 1%, it's much more than the bank pays now, right? And it's a lot of money. And what is even more important on the winning side, the winning trades, what's that? you earn on average a 3%. You're earning here 2.96% on the average winning trade. You earn a 3% on one trade, right? And on the average losing trade, you're losing only 0.33%. So you see that the ratio is very long here. It's a very long ratio. It's almost 10 to 1, almost, not yet there. And that's one of the strengths of the trend systems, that you're really earning on average. This is because it only happens 18% of the times. Still, you're getting here $25. If you watch a scalping system, which we'll do tomorrow, and actually the webinar of today and the webinar of tomorrow, you should watch them together, you will notice that scalpers almost never reach $20 on the expectancy. If I put this on really on good risk levels, like I don't have a too big drawdown, like it's only 10% over so many years, and so on, and the risk per trade is very low, and the risk per streak is only 7%, and something which is logical and not excessive, right? $25 is a lot of money, and which means that when you're in the drawdown, these are the systems that you want to have. That's the second part of the slide here. The trend systems are the ones that are going to recover you from the pit, from the dark pits, right? They're very, very good because they have high expectancy. Okay, you're earning 0.2, 0.3% on average. When you catch a good trend trade, you're earning 2%, 3%. You see, and that's really a lot of money for a trade. Okay, scalpers don't have that. Scalpers, you either need to put a lot of volume to trade with a lot of lots, or a very high bet size in the UK, right? And that's not recommended. So you should always have 1, 2, 3 trend systems for when you're really in the drawdown, and hope that they recover you from the drawdown. That's actually the two big things about trend systems, right? High expected payoff, very good to recover from the drawdowns. That's why I call them the goalkeepers. You see that? The exit is very bad. They shoot very badly. This sounded very bad, but I didn't find better wording. Right, the exit of the shoots or shots or whatever, it's very bad, but they keep your account. They're really goalkeepers, the trend systems. Okay, so I hope you got that concept clear now. So any questions so far? How are we doing? Any questions here? Any doubts? New people? Very technical what we're talking. It's very theoretical. Just put me some feedback on the chat and tell me you're doing fine. Okay, great. Some smiley here. Only one person. Okay, somebody else. Some feedback. Okay. So regarding trend systems, also, it's very important that you analyze the streaks, the losing streaks. And they have very, very long losing streaks. That's bad actually. But the good thing is, look at that. This system had 21 losing trades in a row. Terrible, right? That's typical of trend systems. They will do one big winner, right? One loser, one loser, one loser, one loser, one loser, one loser. Very small losers. Stop loss is very tight, right? Right? 21 trades. But you know what? They're very regular in the streaks. It's very good. We have a software, and we analyze the streaks of trend systems, and they're really very much like patterns. Okay? Ted has a good question here. Great info. I'm happy you like it, Ted. We'll be back in London on the 12th of March. Actually, next Friday, on the 19th of February, we'll be lecturing at the Forex show in London. So, trend markets, I would say 9 months. We'll see it. Actually, we can check in the back test. It's a good question, like that. So just watch yourself. It goes from here to here. You caught here very good trend market, right? We'll check the dates now. This is kind of a lateral market, I would say. Well, it's going up, but this is definitely a very clear trend market. I would say it's like 6 months, right? Not longer. We could check here. And once you catch it, you're in it. You ride the flow, right? You catch it all. This is like from 2013 February till July, 5 months, right? And this catches. You can just watch all the back tests of different trend systems, and they last 6 months, 9 months, sometimes a year if you're lucky, right? And here's also trending market. Since May, we're kind of trending in the euro dollar also. May 2015. Okay, so we could say a little less than a year, but it's really working, the trend system on the euro dollar now, right? Good question. So the streaks can be analyzed in trend systems. That helps a lot, but we'll see in the weaknesses. You need to have a very strong psychology, because you will have one stop loss, another stop loss, another stop loss, another stop loss, up to 21. And you need to go through that. Okay, so psychologically, it also helps a lot suddenly to make a 3%, right? You go there and you make your 3% on a trade. There is even a trade that made almost a 7%, right? On just one trade. You'll be very happy about that. And that's also, I would say, a strength of the trend systems, right? These very big winning trades, these very huge chunks of money in your account, they help. Okay. Another thing which I'm not so sure it's a strength is that people really understand trend systems. That's the first thing. You go to any trading lecture and any lecturer will be talking about trend systems. It's amazing. I'm sure in the London Forex Show next Friday, if we just make a statistic on who is lecturing and what they're explaining, I would say 90% of the people are explaining trend systems. No doubt. Why? Because they're easy. Almost anybody can understand what is a trend. No, you can see it visually, you can understand it numerically, but yeah, because the trend is your friend, exactly, Faisal, and it's not necessarily your friend. So it's good to start, yes, but I would say you need to become more sophisticated. You need to become, as a trader, I don't care if you're doing manual trading or automated trading, but you need to become able to trade breakout properly. You need to become a good scalper. You need to become you need to understand range trading, which is very complicated, right? Ranges are the most complicated thing to trade, but they happen 70% of the times. Okay, so it's a strength. Yes, it's easy to understand. Okay, so many of these trading systems are set and forget. If you don't have a complex trading stop, you can really leave them there. They will be in your platform for days in a row, and you can really go to work, and you don't need to think about that. That's really an advantage. As I said, the psychology, and they have a very long holding time. Some people, holding time is the average time of a trade in a system, right? And you just measure the complete time you were in the market, and you just divide it by the number of trades, right? And I would say that usually trend systems are, depending, the volatility trend system I showed you would be on average 15 hours, 17 hours, right? And the other one I showed you that we give you for free is on average 2-3 days in the market. And this can help psychologically, right? You just don't care. You're already on the winning side. Normally trend systems that are based on moving averages and go for long targets, like 200 pips, 150 pips, 300 pips, something of the sort. The first day is dangerous, right? In the very first 15 hours, I would say, it can go really against the stop loss. Once you overcome these 15 hours, I could show you with software actually next time if we go more in depth in this. Actually, we do this in our education. We check. I can draw it actually now. The funny thing about these trend systems is that the first hours are dangerous, but after you're on the safe side, let's say if you put a trend trade, this is the entry and we're going long, right? And we have the stop loss very close by, let's say 30 points, right? And if I would draw the hours, let's say here's the hours I'm in the trade, right? The first 15 hours, good chances are it goes against me and I'm going to lose the trade, right? First 15 hours. maybe I'm on the losing side. But if after 15 hours I'm still in the trade, right, probability is, chances are, I'm already on the winning side, and it's going to be a runner. It's going to be a good trade. So you should know that the holding time plays in your favor in the trend systems, right? Usually it's the first 12, 15 hours are decisive, right? Depending on other and this is for the moving average, the long trend systems, right? On the other ones, the first 4-6 hours on the volatility trend systems. If in these 4-6 hours you didn't hit the stop loss, you're doing very fine. Okay, so that works in your favor, right? That's very good. I mentioned that, right? You have a very high expected payoff. In the winning side, sometimes you make 2%, right? $200, sorry, on $10,000 account, and it's very high. It's above $20, unusual $30 per trade on average, and they recover you from drawdowns. That was like kind of a recap. What is terrible is the flat market, right? And it's very difficult to know when they're finished. You don't really know when the flat market is finished. You could say, okay, this is a flat market. I'm not making any money already, right? But you first caught a very long losing streak, which is terrible psychologically. But if you stop your system here, you don't get the recovery. So that's very, very bad. And this period is lasting a lot, sometimes even up to 2 years. And this is really terrible for a trader. That's why we say always you need to trade them together in a portfolio. Because if you would be only trend trading, you see that all these lecturers, they go there and they tell you about trend trading, but they don't tell you this. What happens is that suddenly the strategies fail. Oh, well, whatever, and they start changing the strategy or telling you another story. But the truth of the matter is that trend systems, no matter how good they are, they will have very long stagnations, and sometimes over a year. So our recommendation is you need to leave the trend systems trading, but in these years, you need to have other trading styles in the same account, because otherwise you cannot live from this. 2 years not earning, just moving the money back and forth, just only making volume for the broker, but not for you. So that's the truth about trend systems. That's really the truth. And flat markets are very, very long. I would say 1 year, 9 months, sometimes 3 years. If you really catch a flat market, you're done with the trend system. You're not losing money, but you're not making money. And nobody tells you this. You should really take note of this. It's very, very important. The streaks kill you when you catch the consecutive losses one after the other, as I showed you. Okay, and trading systems, they're very difficult to stop because you really don't know what in the streak you are, right? You say, okay, I'm going down. This is 1 loser, 2 losers, 3 losers, 4 losers, 5 losers, 6 losers in a row. I could actually show you this period because it's very easy to show you the great trades, right? Let me show you the bad streaks here. Let's go to this date. Let's watch it. And it's exactly on the Greece crisis. It was too much volatility, you see? It was exactly in May 2010. It's not by chance, right? So there we go, 28th of May 2010, in the middle of the Greek crisis. And we're going to catch beautifully all the stop losses, one after the other. And that's the truth of a trend system. Okay, there we go. Sorry, it was in visual mode. Otherwise we didn't see it. There we go. And we're going to catch one stop loss, the next stop loss. You see? There we caught the stop loss immediately, actually. It's very tight. It's 15 pips or so. And you should say, okay, then let's put it further away. Another stop loss. Another trade with, it catches all the stop losses here, you see? Losing, 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 one after the other, right? And that's the truth of trend systems, the losing streaks. And it makes it very difficult to stop these things. Okay, so they're useless sometimes for 2 years. And after 2 years, they start functioning again. And you should know it. Okay, so a quick recap. We are close to finishing the full hour. We cannot say that trend and trading systems are better or worse. We cannot say they're better. Depends on the market conditions, right? Definitely they are worse for flat markets. They are very good for trending markets, obviously. They are simply another trading style. You have to trade them. You should not only trade this, that's the main message from my side. You should be trading trend systems, but not only, okay? So run away from lectures that tell you only trend systems, trend strategies, okay? And I would say you should have at least one to three of those in your basket. You should be trading, and it's better if you trade all three subfamilies. Actually, you should have, ideally, you should have one volatility trend system, right? Let's recap on that. One volatility trend system, one pullback, and one classical moving average trend system. All three together, that would be ideal, actually, on the same account, because they trade differently. They trade different moments of the trend, okay? And that's the ideal. And not only that, you should have also scalpers, which we'll be dealing with tomorrow. And tomorrow I will show you that the ideal couple, so to say, is the scalper and a trend system together. That's one of the ideal couples. You should match a trend system with a scalper together in the same trading account. This will help you. This would help you a lot, actually. Okay, if there is no more questions, just a minute to explain about our advanced education. We have a course starting actually in February. You still can join. That's the cost. It's going to be 60 hours, 12 hours per day. If you want the specifics on the course, write to Olga, to this email, actually, and talk to her or add us to Skype. Let me mention also we'll be next week in London, in the London Investor Show. Here it is, in the Showcase Theater. And I'm going to talk about the myths of trading. One of them is the trend is your friend. I like to demystify stuff. I will be also talking about the myth of over-optimization. Many people really took it wrong, okay? I'm going to talk about another myth that the broker is stealing your money. I will explain why it's a myth. Actually, another myth, it's actually around 10 myths. It's going to be a 40-minute lecture. I hope you can come over in Novotel in East London, in West London, actually. And the other thing is on the 12th of March, we will be back lecturing, this time in Kensington, because Mortgage is closing doors for renovation, actually. And we will be here. Let me show you. And you can, I'm going to put it in the chat now. You can be part of our free lecture, actually with Active Trader. Here, this is the hotel, Kensington Close. It's a beautiful venue, actually. It's a very, very nice room, and we'll be there, and we'll be explaining more stuff. I never repeat the lectures. If you've been to one, you know really that they're never the same. I explain different things, so you can repeat the lecture. You're more than welcome. You need to register here for free. And the third thing was, if you want the robot that we showed just very quickly, you just need only to open a $2,000 account with Active Trader, and you'll get both robots for free. Tomorrow we'll be talking about scalping, and you just need to optimize them. You need to learn to optimize, that's for sure. I mean, I give you the robot, I don't give you the settings. I need to tell you in advance, okay? But you can get the robot for free, and just write us an email or write to Active Trader, to Ross Newell or whomever over there, and you can get this offer from us, okay? So, questions. I hope you understood the whole philosophy of trend systems, and that there is not just trend systems, there are subfamilies. There is even more, okay, than these three, but let's start with these three subfamilies. So Ted said here that you have a better understanding. You tried various manual systems. You tried profits for a few months, then losing sequence. Exactly. Yeah, when to stop a system is part of our advanced education, Ted. There is algos, there is ways to detect that the system is not working anymore. But it's a very, very complicated question and answer, actually. It's not so easy to tell you, yeah, you stop it here or stop it there. It depends completely on the trading family. You wouldn't stop a scalper the same way you would stop a trend system. That's the first part of the answer. And it's very unique to every system. But you should know, really, if you're doing manual trend systems, that you can really catch up to 2 years of not earning. So this, every trader should actually say this. There's not a trend system that will last years and years and years in a row. That's a lie. That's a blatant lie. I've watched so many robots, Ted. I've watched so many manual systems that were turned into automated systems, over 1,000 over the last 8 years, and I tell you, there was not a single trend system that didn't have 9 months of stagnation, even if not more. That was the best, actually. The best had only 9 months of flat markets. That was the best. So I believe in manual trading systems, it's going to be even worse because they're not so well optimized, right? The parameters are not so adjusted. They just tell you, okay, put the stop loss below the lowest minimum, or put yourself 30 pips stop loss, but they don't. It's not accurate. We are much more accurate. We say, okay, it's 28 pips. Why? Because we did a back test over 9 years or something of the sort. You see that? So you should know that trend systems have a lifetime, which they can last very many years, but you need to really eat up for those stagnation periods, and they are not shorter than 9 months. Several times. I mean, if you watch here 9 years, if I take the other system, just to compare, and this was the volatility one, remember? And I'm going to do a very long back test, actually, from 2005 onwards till today. You will see, even if it's a good system, you'll see. Look at that. Look at that. How many years is that? From here to here, right? It earns a lot when there's volatility, right? But look at those 2 periods. They kill you. That's flat market, right? And they last very long. Okay? More questions? More questions? Okay. If there's no more questions, meet you tomorrow at 8 p.m. London time. We'll be talking about scalpers. Okay? That's just like the complimentary lecture, webinar to today's theme subject. Okay? So meet you tomorrow at 8, and hope you got some valuable info from the webinar today. If there's no more questions. Okay. I think that's it for today. Thanks for coming, and see you tomorrow. Bye-bye.